About your money right now. As I mentioned at the top of the hour, a key economic report is coming out this morning. The Consumer Price Index set to be released next hour. Investors bracing for more record high inflation. Stocks falling Tuesday ahead of the report's release. The Dow losing nearly 200 points. The NASDAQ and S&P both staying pretty flat. A NewsNation business contributor, Lydia Moynihan, joining us right now. Lydia, good morning to you. So in terms of the CPI, tell us about what we're forecasting. How bad could it be today?
The question is it coming in hot or not? Last month we saw 8.6% inflation, which we hadn't seen for 40 years. And a lot of economists are expecting we could see this inflation number inch a little bit higher to 8.8%. So whether or not we hit that remains to be seen. But I think the important thing to note here is this is backward-looking information. So this reflects data from a month ago. And a lot has changed in the last month, not just with interest rates, but we've also seen commodity prices have been falling. At the tank, it's not quite as painful in the last few weeks. Prices are coming down at the grocery store. So even if this number is 8.8%, which is higher than we saw, previously, it doesn't mean that that's going to continue. And there is some optimism that this month will likely be the peak. And everything we know at this moment means that it could come down.
But I guess I'm curious to know, like, these little percentage points, 8.4, 8.6, 8.8, 6 of one, half a dozen of another. I mean, is it really going to be that important to the American family? If inflation is just high overall and doesn't go down, is the federal government just expected to keep raising interest rates again and again and again and again?
Well, you're absolutely right. Yes, it's very high. That's what matters to everyone. But again, I think what we're seeing in the last couple of weeks is that prices are coming down significantly at the pump, at the grocery store. And I also want to note, too, that core inflation, which reflects less about commodities and food, that is coming down pretty dramatically as well. So I do think we're going to see some relief starting soon. But you're right. Right now it's high and it's painful. And I do think the Fed is going to be forced to raise rates in the near term until we get this under control.
The question is whether lower prices at the gas pump and at the grocery store are enough to stabilize the economy. Because, again, this is a bigger problem.
No easy solution here.
Yeah, this is a big problem. Lydia, thank you very much.
The White House is already trying to get ahead of the CPI numbers. As we mentioned, that is the Consumer Price Index, and they're going to play damage control. Press Secretary Karine Jean-Pierre saying the administration thinks that the numbers are, quote, out of date.
Gas and food prices continue to be heavily impacted by the war in Ukraine. And there are a few important points to keep in mind when we get this backwards-looking data. First, June CPI data is already out of date because energy prices have come down substantially this month and are expected to fall further.
So Nick is at the NewsNation Smart Board with the numbers here. It's interesting. Most reporting is backtracked, and we're getting it a month out. So why was this even a talking point?
Because they want to try to spread the good news, right? So what's happening is the White House kind of has it right. They're not wrong, but they're not 100% right either. What Karine Jean-Pierre is saying is that, hey, you're looking back, you're looking at old numbers, and it doesn't reflect the current thing. And she's not wrong. That's because, according to the Bureau of Labor Statistics, the Consumer Price Index is actually divided into 3 different pricing periods that are spread out over 10 days, one for every 10 days. So what's happening is the prices that we're seeing today do not reflect the prices that are at the pump this morning. But we do have data for the last few days of June. And that shows that even if we look at current prices in the CPI, that information is 2 weeks old. That's why the White House would like you to focus on gas prices, because we have seen those prices go down in the last 2 weeks, right? So if we look at what the CPI is doing, if we look at June 1 to July 1, we can see that that price actually went up. What the White House wants you to do is look at the last couple of weeks of July, where we've seen an 18-cent drop. Mitch, AB, this is it. Simply put, the White House wants you to focus on things that the Fed focuses on. Jobs, the money that you spend out of your pocket, because if you feel better about that, you're not worried about what's happening in other places. And if you see friends getting jobs, you're like, things are going well. But we can't help but see those prices at the pump every time we drive down the street.
They're still high, and 18 cents is not a deal breaker for most people, or a deal maker. For that matter. I think a lot of people get in the weeds with this economic data.
Absolutely, which is why they don't want you looking at that. They want you to, oh, job numbers are up.
Well, if you remember the 4th of July thing, they sent out a press release last year about how you were saving like 16 cents
Absolutely.
on your 4th of July. Well, this year it's up $10, and they were crickets.
That can barely buy a pack of hot dogs. All right, moving on. Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.